This is our Forex blog for March 29th, 2011. I didn't come into the office yesterday, so I didn't record a Forex blog for yesterday. You know, like most days, you want to see which currencies are strong, which ones are weak. Today we had a lot of weakness in the yen. The daily, weekly, and monthly trend was down. Also weakness up until about 5 in the dollar. And so you want to trade these two weak currencies against the ones on the bottom that are strong. Strong CAD during that time. Strong euro during that time. So it makes sense to buy the euro dollar and euro yen from around 11 to 5 o'clock. Let's start at the euro dollar. You can see also that this had two NR 4-hour bars in a row. Usually when you get two of these in a row, you tend to get trends. The rule for a narrow range pattern is if it breaks out above the high and the price is above the hourly, you want to take it. If it breaks out underneath the low and the price is above the hourly, you're not as likely to have, continuation. So, you might have actually gone short right here. It did pull back about 10 pips. You might have had break even or 5 pip loss on that one. And when it went from underneath to above the hourly, the longer term trend of the euro dollar's up. You're in this trade and it just absolutely took off. If you use our new FX momentum tool on this, you can see that as this thing took off up here, there was, even earlier last night, 11 o'clock, incredible momentum to the upside and virtually no red bars of any significance. And what that's telling you is other euro pairs are going up at these times, especially right here at midnight. You see a big spike like that after not seeing much weakness, that trend's likely to continue, at least to, the 10-day moving average or previous day's high right here. So if you had got into that breakout on that bar, seeing the spike, there's pretty much smooth sailing ahead. As you can see, all green bars, a lot of green bars hit our extreme 1 level, and when they're slightly underneath that, it's still pretty strong. Only, 0.5 and under are insignificant bars. So, and when you see volatility increase like that, it's common to see, 1, maybe 2 bars of intense red, but the majority of the time, the trend continues. If you're a longer term trader and you want to hold for 2 waves, draw your fibs on this on the first wave up, and then when it gets somewhere up here near the first or second fib target, you can see this was also the monthly pivot, major resistance area, and you can also see the incredible momentum that was on the way up all but disappeared. In other words, as this was going up and hitting this fib target and a weekly pivot level, major resistance areas, our counter trend sell signal right here, other euro pairs were not going up much. They were inching their way up without much intensity, and dollar pairs, were no longer weak, and it really perfectly nailed the high. The weekly pivot combined with the fib target, combined with the momentum slowing, it really didn't have any peak bars for about an hour, and it just kind of went sideways up here. Aggressive traders might have went short here, and if you didn't go short here on the way down, you can see incredible weakness on the way down. You get rid of this, and you can draw your fibs on that wave down. Notice it pulled back up to the 38% retracement, previous day's high, without much momentum. And if you went short right here, as it starts to fall, you can see a lot of weakness here, and it kind of goes soft underneath here. You might have got out of your trade here with 20 or 30 pips. And usually when a currency breaks from above to underneath the hourly moving average, and you get a retest like that and it's not able to go above it, as soon as it goes down below that bar's low right here around 87, you can go short. And because the longer term trend's up and it was strong earlier, I would draw my fibs on this little wave right here and look to get out somewhere down here with a tiny 20 or 30 pip move. This is also the Fibonacci retracement level, the gray that I drew last night, and it was a very high probability low considering the market fell from the upper bands. The euro yen also was strong from midnight or 11 till 5. In fact, this one actually continued up. When you saw the euro was strong and the yen was weak, you might have considered when it broke from underneath to above the hourly going long right here. There's major resistance right here, which you can see the market stalled. And then it went up to our fib profit target and previous week's high. Great place to get out of the trade. And on the way back down, it found the previous day's high, which you can see right here. Found support, and that's a pretty decent place to get in on a pullback. You get back in, and notice on this chart as well, we'll add the FX momentum. shrink this down a little bit. And notice, as this thing peaked right here at the fib target, major strength. The euro's going up, yen's weak. And on this pullback down right here, actually you might hesitate getting into that trade because there was quite a bit of weakness, as you can see. And then the market, went down again on this bar. And even though this bar is red, notice other euro pairs are going up, yen are getting weak. You had that green bar right here. When it broke out, it was pretty high probability. And notice when you're in this trade here, there's mostly green bars. It double topped up here at the previous swing high with some momentum slowing down, as you can see down here, right? And so you're in that trade somewhere around 36, out up here for 20-something pips. And notice on this pullback, there's initially a little bit of weakness, and then it all but disappears. The trend's up, and you would expect a double top at a major Fibonacci profit target to cause more of a pullback. There wasn't. And so when it went sideways here for half an hour, broke out, you're in that trade again. Notice as this went up, big spike. And usually at the end of moves, big spikes oftentimes can be the end. So, be cautious of that. And you would expect, again, a little bit more of a pullback. There wasn't one. You draw your trend line over the bar's high. Notice, there was a little bit of weakness. It all but disappeared, after this bar right here. Green bars preceding a breakout when the trend's up, daily, weekly, monthly trends up. Pretty high probability trade. And again, here's the next fib target I drew last night, plus today's intraday fib targets right there. Good place to get out. You're in this trade around, 55 or 60. Out of that trade up here at 90 for a 30 pip move. And when the market's, made a couple waves up, it's usually best to, kind of wait and see what happens. The higher up it goes, the more risky it is to buy. You can see, whereas the dollar became strong from 5 to 9, the yen didn't. So you could have continued to trade, pairs that are strong against it. Now the CAD also was strong today. Weak dollar, strong CAD means you're looking to sell this one. All right, this one, really trended down a lot the previous day. Came up to the hourly moving average, and usually it's not a, not the best time to trade here. But when it broke down underneath this low here, it's underneath the hourly. Pretty decent place to get into that trade. And if you weren't into that trade, when it broke out underneath the NR4 pattern on the previous 4-hour bar's low, again, you're trading with the trend, and it came down counter trend buy signal right at the previous day's low right here, and it was a 2 days ago low too. So there's likely to be some major support down there. Not a whole lot of weakness down there. We do have an Elliott 2-wave pullback on the way up. You draw this from this first wave right here, and usually at the first or second fib target. This one has the 20-day moving average right here. Not a bad place to go short, and it pulled back about 15 pips. Kind of choppy and sideways after that. Mainly because after 5, as you know, the dollar became strong. The yen didn't, so the CAD yen would have been an excellent one to buy. You can see last night went from underneath above the hourly, went sideways right here, broke out. You're in this trade around 68, and it goes up to the previous day's high, and kind of double tops there with out that much momentum. You might have gotten out of your trade here. And when it breaks out of here, because the CAD is so strong and the yen is weak, you go long again right here, and it just basically took off. If we add our FX Momentum Pro to this, you're probably going to see a lot of peak bars on the way up here, because the CAD, was so strong and the yen was so weak. Notice, let me get rid of the one underneath it here. Notice, as this was going sideways right here, a few weak bars, not much, a little bit of weakness right here. This next bar went green, and then when it took off right here, you might have anticipated this trade because it double topped up here without that much strength, pulled back without that much weakness. None of these pullback bars hit the white line, and when it went sideways like this, great place to get in, and the market just took off again. You can see on the way up just incredible momentum. You might have gotten out of the trade a little bit early up here, but nonetheless still found about a 30 pip move.